When a CEO resigns or worse, gets fired, does that mean that the share price is about to tank? Well, we're about to find out. Welcome back to my channel, Words on Wealth. My name is Zoe and it is a pleasure to have you here. And in today's video, I'm talking about how high-profile CEO departures can really affect a share price, because we've seen over the last few months quite a few big ones. To name, we saw Nestle fire their CEO for inappropriate relations, and of course, most of us can remember that very recent Coldplay kiss cam incident that led to the CEO and head of HR at Astronomer also see the end of their years. So I'll be digging into the impact on share prices, not just in these companies, but in others too, and what this means for you as an investor, whether you're considering investing into individual stocks, whether you already do, or whether you're an investor that's just simply thinking of the wider market and wanting to understand a little bit more how these kind of dramas can really impact you, your money, and your investments. So put really simply, a CEO departure is when the head of a company is either leaving or ousted for some reason. Now, the ones that we've seen most recently have all been related to misconduct. I think it would be fair to say, to group them together into such a fashion. We saw Nestle's CEO be ousted for misconduct, an inappropriate relationship. We saw Astronomer's CEO equally ousted for what was deemed to be an inappropriate relationship. And we saw the same happen at BP just over a year ago, with the CEO, equally who'd been in the company for an awful long time, ousted for an inappropriate relationship. Now, the details around these haven't necessarily been disclosed, but what we do know as potential shareholders or investors is that there is therefore an impact on the company, because the person that was leading that company is no longer in charge. Now, short term, when we look at the share prices of all of these companies, and indeed others who face similar turmoil around their CEOs, the share price tends to drop. The announcement around a CEO being ousted, usually last minute, is often quite a shock, and usually shocks cause downturns in stock price. In the short term as well, there can also be a lot of white noise and speculation. Things like, who's the next CEO going to be? Is there anything behind it if the reasons haven't been disclosed? And what does that mean for the direction of the company, and therefore inevitably the performance of the company and the performance of those shares too? But when we're thinking long term, things can look a little bit different, because it's well known that CEOs aren't going to be there forever. They are something that is going to change as the company evolves, and of course, they potentially move on to other areas of their career, or indeed even life. The CEO tenure is often a relatively set period, and can inevitably be somewhat shorter than we'd expect a company to look like. The question around how negative the long-term outlook can be for a share price all hinges on how strong the governance of the company is and how well the exit of the CEO is handled. I personally love the example of Disney and the two Bobs. They had two Bobs as CEO, and it was a case of old Bob, new Bob, and then new Bob again. Indeed, it was Bob Chapek who was the CEO between 2020 and 2022. Now, whilst he was in tenure, the share price of Disney really plummeted. Of course, there was lots of other things going on in the world in 2020, which could be argued to have also affected the share price, but it's arguably also the CEO's job to guide the ship and to try and smooth things over, and to show to shareholders that there is clear direction that is positive and strong as to where the company's going. So Bob Chapek was ousted and Bob Iger was brought back in. He was the former CEO prior to Bob Chapek. So as I say, it was old Bob, new Bob, and then old Bob again. And when old Bob came back, we saw Disney's share price peak just in one day, up 6%. Bob Iger's return has equally seen a longer period of stock growth for Disney. So it does go to show that the CEO, how they run the company, and their general popularity do really impact the overall performance, not just short term, but also long term when we're thinking about share prices. If we zoom out a bit to look at those longer term gains, we could think about the examples of Microsoft and potentially Nvidia as well. Microsoft has had the same CEO in place since 2014. While Satya Nadella, the CEO of Microsoft, has been in the chair, then we've seen growth in the share price of arguably up to 1,000%. It's been pretty mega. And with Nvidia, it's also been pretty mega. They're now the largest company in the world by market cap. Jensen Huang, who is the co-founder and CEO, has been in charge since the very beginning, since 1993. As you can imagine, their share price has absolutely skyrocketed. I don't even need to go into the numbers of quite how much that is to say that they've gone from a total unknown to the biggest company in the world by market cap. This just goes to show that having more stable CEOs in place can really boost the overall governance and leadership of a stock. And what this means is that the company can really grow, and so can the share price. Both Boeing and Peloton have been victims of a bit more of a revolving door of CEOs. They've seen quite a few come and go through various different crises of both companies, and this has negatively affected both of their share prices in the various turnovers and into the long run, arguably, as well. Now, don't get me wrong, being a CEO, particularly of a major corporation, is a pretty tough gig. And there's some storms that can of course be weathered, whilst others might prove a little trickier. As we've moved into an ever more present and online world, the scrutiny on CEOs has also increased. Things like the Kiss Cam Coldplay incident is almost unthinkable even just a decade, perhaps longer ago. There would not have been that public visibility around who that person was, and therefore tied into their role, position and tenure as CEO as well. As more and more people are more invested in the stocks and investments that they hold as well, the scrutiny levels have only increased because people are demanding that where they put their money is in safe hands. So if it's seen that a CEO is misbehaving, then it might not be seen as so favourable amongst investors. Again, if we wind back the clock, this level of scrutiny might not have happened in previous decades due to the fact that perhaps not as many retail investors were involved in the stock market and people didn't necessarily have the same level of ideas around what a CEO could or couldn't do. And on that note, the likes of ESG ratings have become ever more present and pertinent. It's something that investors do really consider. So if there's reports of misconduct and a CEO is not sufficiently reprimanded, it could negatively impact the overall view of a company that is perhaps otherwise seen as relatively strong on an ESG front. As a result, it's likely that we see slightly higher turnover of CEOs, and that revolving door sentiment just increases that little bit. On the one hand, this does suggest that corporate culture might be getting a little bit healthier. But it does mean that we as stockholders, investors, or people with concerns around where our money is going do have to face some of the consequences and also understand how we can best manage some of those ups and downs that are caused by this movement of CEOs. So, here's what you should do if you do notice a CEO departure. Firstly, if you've got individual stocks, your reaction is going to be different to if you are an investor into wider funds or into a broader portfolio. Let's zoom in on the stock first. What you'll want to do is you'll want to check. You'll want to monitor the stock, check for any notifications that the company has put out, check out for any PR-related statements that are made, as well as the movements within the share price itself. If you're investing into single stocks, depending on what your risk profile and strategy is, you might want to seek out those companies that do have more favourable governance in the long run. As we've seen with the likes of Microsoft and Nvidia, of course, only two examples, generally having a CEO in for a longer tenure is less disruptive to the share price and can mean that a company and their share price are able to grow much more sustainably and efficiently. Equally, if you're looking to take advantage of highs and lows within a share price, some of those revolving door aspects may well be appealing, in which case you might want to look out for those companies that are more distressed when it comes to their leadership. If we're zooming out to what it means for those investors that are focusing more on broader market funds or indeed broader portfolios, all of this can mean that actually there are still wobbles and little niggles that you see. Often we do tend to see a bit of a ripple effect. If, for example, certain CEOs have been involved in a scandal that involves others within the sector, or indeed if there's just a bit of a general sector or market worry around the likes of governance, how that looks, and how that shapes the direction of the overall stock market, particularly if it's a big company that has a lot of size and dominance on one of those indexes. So what you should be looking out for is exactly how some of those CEO departures that you might see in the headlines affect your investments. You might not see anything, in which case, great news. It's been absorbed by other companies within that day, week, or month. If you do see a little bit, you start to understand whether it perhaps is short-term or long-term and what that might mean for the overall performance of your investments. So all of these headlines around CEO departures can cause a bit of a furore. It can certainly cause some amusement along the way too. But for your investments in the short term, it can cause volatility. In the long term, it's very dependent on context, what the rest of the company is doing, and how strong they can be in weathering some of those storms that CEO departures can bring. So don't assume that a CEO departure automatically means disaster for your share price, but don't overlook it either. What do you think? I'm intrigued to know. Let me know in the comments if you've seen the impact of any of these CEO departures on your investments, if it's something that you'd even ever thought about in terms of a wider portfolio as well. I hope you're enjoying these videos. See you all soon.